Good morning, folks. Welcome back to our morning call here at Guardia. I'm Miguel, your host and market jockey. Let's keep it that. So this morning I'm going to jump on a few things. In particular, the central core focus, I think, of the last 24 hours, for me at least, has been Dave Portnoy getting Barstool back. So it's touches on so many different things we have said, talked about, written about here at Guardia, and Penn was one of our picks in our model portfolio, and one of the most kind of like idiosyncratic, risky picks. And the stock has rallied significantly after the announcement that Penn Gaming is going to actually sort of dump Barstool as their content generator, betting business partner, which they acquired. They had bought Barstool, sold it. Dave Portnoy sold Barstool to Penn Gaming, made a boatload of money, and now Penn Gaming is reneging on that decision and opting to work directly with ESPN to try to drive this sports betting business. It's kind of an insane outcome. It's not something that I predicted whatsoever looking at the business. It was certainly not, I don't think I've seen anything like that, where a company sort of divests from an acquisition, a public company divests from an acquisition by giving it back to their owner, to the seller, at no cost up front, at least, and then simply swapping it with a partnership with an external entity. It's nutty, but it shows that there is a lot of moving and shaking going on in the markets with buybacks. Public markets, private markets. Here are some examples. The first thing I wanted to show you, because I actually already, oh no, I don't have it up. So this is the first thing I wanted to show you was Diddy buys back Sean John clothing for $7.6 million. This was 2 years ago. This was in 2021, December, I believe. And it's something that I was celebrating. I thought it was epic. I hadn't really seen this before, where Diddy built a brand, Sean John, a clothing brand popular especially in the early 2000s, sold it to a conglomerate for a hefty sum. We can scroll through the article. Let's see if they give it the data from the sale, but I think it was in the hundreds of million territory from the last time I kind of examined this. But then he goes and buys it back for $7.5 million. So he profited enormously off the sale, probably made some money operating it too, and then gets to buy it back from folks who mismanaged the company for a huge bargain. It wouldn't surprise me, with all the Y2K stuff going on, that you see kind of the kids down in Nolita and Soho and those areas, ripping the Y2K style. Wouldn't surprise me if we see some Sean John, and he gets to sell it again for excess of 100 million, something like that. So the buyback stuff is incredible. The Portnoy situation reminds me of that, because Portnoy gets his company back for free. However, if he liquidates the shares or it gets bought out by another business, I guess he has to pay 50% of the proceeds back to Penn Gaming. I think that's how the deal was set up. At least that's kind of the simplification of the deal. Another thing I'm pointing out is ARM, which is a semiconductor business, and Amazon. So it looks like Amazon is going to be the lead investor in ARM in some sort of corporate action. So we're seeing that. We're seeing people sort of leveraging power and position to grab a hold of assets that they know how to control and they know benefit their business directly, as opposed to kind of going out into a bull market and speculating on a bunch of different stuff. So we're seeing ARM and Amazon sort of in that game, and then L'Occitane, which is I guess pronunciation, L'Occitane, I don't know. But it's, a skincare business. I know them for their soaps and whatnot, and their name that's difficult to pronounce. But looks like the, lead shareholder of that business wants to take it private. So we're seeing a lot of movement in sort of the buyback world. Really cool, interesting sort of market event, corporate action type stuff. Always exciting, but we have to re-examine Penn Gaming, because the stock rallied significantly, which is great for our portfolio, especially because it was the worst performing item in the model portfolio with a negative return. We were down, I think, at the worst 30% on that name. By far the worst pick in the model portfolio, and it recovered quite a bit from this ESPN hype. But it's definitely kind of in that yellow-orange warning category for me now because we have to re-examine. This is not something that we expected. Great that there was some upside for it and we recovered some of the loss on that name, but it's definitely worth a re-examination. In the next 24 hours, I'll probably be making some sort of decision whether we're going to keep it, whether we're going to get rid of it, or figure some, or reduce the allocation of the position and go into some cash. We'll see. We'll make an announcement in the next 24 on the research channel on our Discord. We'll probably mention it on the call on Friday as well. Second thing, market update, quick update. Last week was really bad for U.S. equities, the U.S. downgrade, some pretty bad guidance from some of the companies that came in earnings. That has spilled over until today. I'm going to peek while I keep talking at kind of how the market opened. We're 7 minutes into the open. And not great. I mean, pretty flat open. S&P pretty flat, NASDAQ pretty flat, Dow Jones flat. VIX is negative, so volatility is down. Oil prices spiking back up after some volatility, and then we see some good action on like Bitcoin and Penn Gaming up 12% at the open. We're back to 27 per share. So some recovery there. Market likes the business, likes the ESPN collab, likes that they cut loose Portnoy. I think that both parties will probably benefit from that decision. Although it's a shame, I feel like maybe Barstool couldn't make it work in that sort of sense, in this pushing to a transactional business sense. You know, maybe it just needs to live on its own as a media business, and that's where they sort of cut their teeth. And with a magnanimous, owner at the helm, we'll see how it goes. It's funny because I'm not a big fan of the publication. I'm not a big sports fan, but I like the story. I like the business story and, that founder energy and that sort of thing. So a lot of fun there. But in general, markets didn't have a great week last week. There's been some signs of recovery. The opening is flat, although I see now the NASDAQ is taking a little bit of a dive. But there's a lot of things hanging over us, right? There's the U.S. downgrade on the sovereign level. If you haven't been reading financial news, I'd be happy to inform you that U.S. banks are also being downgraded by the very same rating agencies, mainly mid to small banks. WeWork released in their earnings report some forward-looking guidance, basically citing an existential crisis. I'm not sure how the business... They said we're unsure of the business's ability to be an ongoing concern. In other words, like this business isn't working. Lyft indicating that they expect a big slowdown as well. Market didn't exactly love Uber's report either. I mean, they reported profitability, they reported a lot of positive KPIs, but ultimately they reported that there slowdown in people buying rides from them. And then there's kind of that conglomerate that strategists always look for to try to get a little bit of a lead on the economy, which are the Home Depots, Lowe's of the world. Which also tell us a little bit about builder activity, project activity, and those earnings also came back a little bit weak. So hedge funds are like net short. That's my understanding of the last peek I took at where hedge funds are positioned. There's a lot of fear in the air, and there's a lot of people, looking at their performance this year and wondering, should I take my chips off the table? Certainly the right moment to be considering that. But there's also a lot of positive force behind the U.S. market in particular, and I think that's why we've seen so much resilience and continued interest. Because if you look outside of the U.S., there's not too much that's investable with the same perception, like the same clarity as to what will happen if certain conditions change. The U.S. still provides a lot of clarity on that front. That's it, guys. I think that wraps it up for today. Got a little market update. We'll keep monitoring things like the superconductor situation. We're seeing some volatility in South Korean stocks because of that crazy news. I'm so desperately itching to jump into all these discussions about the UFOs and whatnot. Maybe I'll wrap it in to a quick video about like military contractors that are traded publicly. We'll see if there's any movement or volatility around there. Other than that, guys, we'll catch up on Friday. Stay tuned. more stuff coming through the Discord, some research updates, some articles, and feel free to ping me or book a meeting through there as well. Take care, guys.